The financial crisis part 2 continues today. I'm going to bring you everything that you need to know. What we're looking at here has a lot of elements of 2008 because it wasn't finished. It was papered over. I also see 1907, 1929, the 1970s. It seems like it is all converging into a perfect storm. And I'm going to show you what's happening and what is ultimately going to be the result of this right now. Stay tuned. Beginning with this, you can see that individual banks, whether it is Credit Suisse, whether it's First Republic, of course SVB, all of these things have this turmoil that's been occurring that cannot be stopped by even the FDIC, the Treasury, and the Federal Reserve all coming out and saying, we're going to bail them out, we're going to backstop them, we're going to have no problems with this. And yet it is still tumbling down because those promises are always broken. And of course, nobody trusts the bankers. So that's what we're dealing with right now. Let me show you this here. When we have what is called a yield curve inversion, I'll talk about that in just a second. This happens to be the 2-year and the 30-year. This is a general signal of a recession incoming. And here we can see what is basically, this trend that was going on where it's inverting more and more. That has reversed. So what is a yield curve inversion? Essentially, for instance, in this example, the 2-year and the 30-year, if you were to buy the 30-year, you would think you would get a better return than the 2-year. You're taking much more risk. However, that flips. So when that yield curve inversion occurs, that's usually the sign that a recession is imminent, not when it's inverting, but when it flips. And that happened right now. We are watching it going actually at a rapid clip. And the estimation here is that in about 4 months, it would officially be a recession, officially. And so we are looking at the numbers, the stats, the data, all of the history, and it's adding up. But what does it mean? What is going to be the result of this? Because in every single crisis, there's always a solution. They bring out that solution that they had ready to go years ago, and I'm going to talk about that here. Give me a second. I want to show you what has happened with the balance sheet. You can see the Federal Reserve's balance sheet right now has expanded dramatically, and I want to do an entire video about this balance sheet, so stay tuned for that. However, I just want to give you the insight that it has expanded to a great degree. This is part of, not their quantitative easing policy, because if you look at the actual data that has come through, you will see that treasuries and mortgage-backed securities have actually declined. So those came down, but because of the different facilities that have been open, you look at the Federal Reserve and what they're trying to do, basically extend a hand to the banks. That has really taken up, and you get this disparity in between, hey, I thought they were doing quantitative tightening. Well, through this other channel, they're actually quantitative easing. Not quantitative easing, but the balance sheet is expanding. There's a nuance there, there's a gray area there. And I'm going to talk about that extensively in another video on its own, because that deserves its own video, but I just wanted to show you that. Let's show you this. You can see Jeffrey Gundlach, the bond king. Well, he says that the Fed is broke. The Fed's balance sheet is negative $1.1 trillion. There's nothing they can do to fight any problems except printing money. They have nothing left. The Fed used to send money to the Treasury. Now the Treasury sends money to the Fed. We're at this point in time where we don't have any road left to kick the can down on a mismanagement of our finances and monetary policy. Big stuff. And essentially saying that where we are right now is only to print more money. And the quote at the bottom, I think gold is a good long-term hold. Gold and other real assets with true value, such as land, gold, and collectibles. He makes a very good point here because the expectation, and as I've shown you, the balance sheet expansion means that we are entering into a territory in which the currency will be devalued even further against real goods. We've got to learn from this. We've got to take advantage of it and realize they are making our currency turn into confetti. Big problems that are happening today, and I want to highlight that. But first, let me show you something. Now, this affects you even if you don't have money at SVB or First Republic. Multiple bank stocks plunged double digits recently. And remember, this all stemmed from the Fed raising rates. As they continue, what else could happen that we didn't predict? I mean, Goldman Sachs already says that the S&P 500 will flatline in 2023. No growth, aka no returns. So now Goldman is going big into alternative assets. Many institutions like them are already maxed out at 30 to 50% into alts. And one alternative has seen amazing numbers, even in 2022. Fine art. Last year, art prices rose an average of 29% as per Barron's. 2022 was the best auction year ever, highest total from big three auction houses, nearly $18 billion. Last time inflation was this high, contemporary art appreciated an average of 20% per year from the Masterworks Index. Contemporary art average annual appreciation was 13.8%, also from the Masterworks Index. It's pretty incredible to learn, and it's why I'm excited to partner with Masterworks. They offer paintings from legendary artists like Picasso and Banksy, which are qualified with the SEC and broken into shares. When one resells, you get a slice of the potential profits. Masterworks' last 3 exits have delivered 13, 35, and 10% net returns. And they've had 9 exits in 2022 alone and 11 in total, each of them returning a profit to investors. Feel free to offer any thoughts on the platform. Masterworks has over 660,000 members, and paintings have sold out in minutes. To skip Masterworks waitlist today, sign up at masterworks.art/themoneygps. And that brings me to this, UBS to Explore Credit Suisse Deal in crisis combination. What do you do when you've got an issue? You consolidate mergers and acquisitions. That's what's taking place here. That's what took place in every single crisis before it. Potential deal may involve UBS buying whole or parts of rival. Yes, they were rival banks. Oh, that's right. But behind the scenes, of course, we know what happens. All of these companies actively work in part to do what their task is. You've got the banks, you've got the central banks, you've got the governments, and then you've got these multinational institutions, and of course, things like the IMF, the World Bank, all the supranational entities. They all work together. And so that's a side point. The point I'm trying to make here is that what happens is that you have consolidations. More and more power consolidated into fewer and fewer hands. That means you have less choice. That means you have less freedom, and you can see what's happening. Your currency in the banks don't belong to you. You got to understand this. You go to take out $20,000 from that bank, they're going to be making your life difficult. You might be able to get it out eventually if you call in advance, if you actually, answer the 20 questions, but they don't have all the money. That money's been loaned out. And if even 1% of the people tried to pull all of their money out at one time, banks will shut down. 1% of people, maybe 5%. I mean, depends on the bank, depends on the area. This is concerning. What are they going to do? Number 1, consolidations. This makes it much easier to get through what they need to. Okay, what's next? Credit Suisse shares fell again on Friday despite being bolstered by the Swiss central bank as investors worry about which road the embattled lender will try to take to restore confidence. It's not just Swiss National Bank, Credit Suisse, UBS in this station. You got all of them down the train station. When you look at that, you see stop after stop after stop of more problems. They're all there. It's just that we are on the train. Imagine you're looking out the window and you're seeing things, but those things might be happening way down there. It's just that you get that view out of your window at that given moment. I hope an analogy makes sense to you, because we're moving on that train. This is happening. Time is moving. And yet we see these little blips as we move through towards where we came from and where we're going to. Now, where are they bringing us to? It is extremely important. Tomorrow, I am going to bring out an entire video about CBDCs, central bank digital currencies. And in that video, I'm going to break it down all for you. That's where they're taking us. What is this all about? understand that a central bank digital currency gives the central banks the authority to do whatever they want, whenever they want, with no say by even the Treasury. And we know the Treasury and the Fed and the Congress and the Fed, they work together. But imagine one step beyond, one step removed from that. That's how crazy this is. But they need a crisis to have the need to implement this. They can't do it overnight, and they can't do it for no reason at all. Even much of the Fed, Jerome Powell, Neil Kashkari, and others have basically said, we don't really have a need for this yet. You see? Stay tuned tomorrow. Do whatever you got to do to come back to that CBDC video that I've got tomorrow. I want that to be the big one. I want that to be the one that you share. Look at this here. You can see that JP Morgan obviously benefited like totally from this situation with all the UBS and so on. People get scared. They move their money over to Chase. Well, Jamie Dimon played a key role in the bank rescue effort this week. A situation sparking reminders of 2008. And if you remember what happened, think about this. After the financial crisis, which was largely caused by a lot of these big banks, they sat all of these guys like Jamie Dimon, Blankfein, all these guys, Goldman Sachs, and said, listen, I know that this was a crazy time, financial crisis, and we want to make sure this doesn't happen again. Please help us. Think about how crazy that is. It's ludicrous. I mean, that's how you know they're all in on it. It's like the criminal, it's like Hannibal Lecter in jail, and you go in and you're asking him the question, but you're asking, how did you do the crime? What can we learn from you? And all these things. It's you got to outsmart him maybe, but not in this situation. They're trying to help the situation. Oh yeah, make enough loopholes so that you can get around them later on. Treasury Secretary Yellen not says, okay, this is unbelievable. Wow, okay. Says not all uninsured deposits will be protected in future bank failures. You got to realize that. This initial thought was everybody blanket, we're going to protect everybody. And then Janet Yellen comes out, 1 day later, 2 days later, and says, actually, not all the uninsured deposits are going to be backstopped. Why do you think the markets didn't do so well? Of course, this is the issue, because they want to know that there's no way anybody's going to fail so that they can take maximum risk. I'm going to go all in on the worst garbage stocks. If they do that, if they begin quantitative easing, if they say all uninsured deposits will be protected, pick the most garbage stocks that you can find. The blockbuster bankruptcy stock. You get that ticker, you find that one, if you can believe it or not, in 2020, this thing just went straight up because people were picking the worst garbage nonsense and it was going up like 200% in a day. That's what's occurring, okay? Potentially. This is just talking about what was happening, the fact that the markets are reacting very negatively to the information, the contagion, and so on. And even in this article, really just highlighted the fact that SVB in its final days, they were arguing amongst the board. Oh, what are we going to do? What are we going to do? We're panicking. I don't know. They couldn't make a decision, and that actually make the situation worse. So I tell you that you've got to watch out how much bureaucracy is in these companies. I've worked for huge companies before, and I've seen how much red tape and garbage there is. It's very bad. And I've also operate at this time multiple businesses of my own, small businesses. And I see how efficient and lean you have to be and how smart you have to be, because if there's one little mistake, it instantly shows up, and you don't have lawyers and attorneys, that can, deal with that kind of thing. It's not the same situation, right? And that's what we see here and now. Silicon Valley, a boom era, feels like it's ending. Of course, why? Why is it ending? It's because the cheap money era is ending, at least right now. I think they're going to turn that around as they turn the taps on. I am very concerned because the next thing could be an inflationary policy. That heavy inflation, potentially even hyperinflation, will give them a crisis that could bring in the CBDC. Stay tuned for tomorrow. I appreciate you being here. Definitely put a reminder to check this video out. We will see what happens. I'm really concerned about it. CBDCs are the next big thing, and it's not a good thing, okay? Definitely hit that subscribe. I'll see you tomorrow. Take care.